The CERC has published the tariff regulations applicable for the power sector utilities. The tariff is applicable for the period from 1st April 2019 to 31st March 2024. Harshvardhan Dole of IIFL joins in on the line to just give us his quick take on this. Harshvardhan, thanks very much for taking the time out. So which are the stocks that you would be buying, which is on your top buying list post these tariff regulations, the final regulations?
Hi, thanks. So we have advocated in our sector note as well as the note that we put out after CERC regulations that these regulations are completely a game changer and they kind of, restore the risk reward for the entire sector. And since these are more applicable to the central PSUs, which sell power to more than one state, i.e. NTPC, NHPC, SJVN, and even Power Grid, we are bullish on all the four names. And between these, we like NTPC and Power Grid the most. So we are advocating a strong buy call on these two names, although we like the sector in general.
Okay, Harshvardhan, how does it change the bottom line for a lot of these financial, or for a lot of these companies? What is the kind of EPS rejig that you're probably anticipating, and by when?
So these guidelines are applicable, or these the regulations are applicable from FY20 onwards. And based on our understanding and assessment of these regulations, it appears that if coal situation doesn't worsen from here on, then NTPC's profits for FY20 should see an upgrade of at least 7 to 10%. We are fine-tuning these numbers and also trying to get a hang on how the coal situation will emerge in FY20, which is key for essentially maintaining the benchmark plant availability factor for companies such as NTPC, which will be key determinant of the profits. For Power Grid, largely, by and large, these regulations are neutralish. Maybe a couple of percentage tweaking here and there, but by and large, those are neutralish kind of regulations for Power Grid. To us, significant benefits could actually come to NHPC because until last year, NHPC was incurring an under recovery of almost 4 to 5 billion rupees, which is give or take 7 to 8% of its profits. And the new regulations, provide some additional leeway, which perhaps allow NHPC to absorb some of these O&M costs. So NHPC should also see some earnings upgrades, and we are in discussion with the management to fine-tune these numbers. But yes, NTPC and NHPC will see some upgrade, whereas these are largely neutralish for Power Grid.
Is one of the reasons for this kind of optimism to do with the fact that the return on equity has remained unchanged? Was there a fear that there could have been a cut?
Well, frankly, when the draft regulations were out, the CERC, which is a pragmatic regulator, they had taken into account concerns of most of the investors and developers, and they had put out a similar number in terms of ROE. So the street and the investors, developers, were more or less assured that this time at least the hawkish stance of the regulator will come to an end, and which is kind of underscored in the final regulations. What the street and the developers were looking at is whether there is a gap between the draft and the final regulation, and whether there is a devil in the detail. So I think after 2 days of intense analysis and reading, it appears that finally the regulator has ensured that the risk reward has been balanced, and there are no prima facie adverse regulations which are being put forth in the final regulations which have been published.
Okay. All right, Harshvardhan. Thanks very much for joining in and talking to us and giving us that quick perspective.